Assalamu alaikum everyone, this is Abdulaziz. Today we will gonna talk about non-current asset acquisition and depreciation. Okay, what is acquisition? Acquisition means simply it's a purchase of non-current assets. First of all, what are non-current assets? Our assets are divided into two types, current assets and non-current assets. Today we will talk about non-current assets. Non-current assets are the assets which are not expected to be converted into cash within the next 12 months. For example, office, plant, and vehicles. Okay, what does it mean? Non-current assets are the asset that you're gonna use it for the long term. For example, if you have the plant, if you have the land, these are non-current assets. And well, what if you are gonna sell it? And the selling prices, selling purposes, we will talk about it in financial reporting. Now, how to record our purchase? Debit asset, credit and cash or payable. Why? Because our on the debit side we will write assets, and also on the credit side we will write the cash or our liability payable, right? And for our non-current assets, we have two types of expenditures. First of all, are called capital expenditure or asset expenditures. The costs related to bringing the asset into working condition or improving its earning capacity. For example, legal costs, delivery costs, or purchase costs. Or we can also call our capital asset expenditures like one-time costs. For example, you will spend your money for one thing only one time. For example, legal costs, testing, and so on. And also we have how to record these expenditures. Debit asset, you will increase your asset balance by debiting, and also you will decrease your related expenditure by crediting them, right? For example, Abdullah has bought a plant for $100 and its legal costs were $5. Debit asset 100, you will increase your asset balance by 100, and you are expensing, you have the expenditures of $5 legal costs, right? And you have lost your cash by 105. This is the first step, and the next step is increasing your asset balance by $5 and legal costs by, also you will decrease your expenditure balance by $5 because you will capitalize this expenditure. What does capitalize mean? Capitalize mean you will not incur any expense, and it will be written in the statement of financial position instead of statement of profit or loss. Or we can also say that this expenditure does not affect your profit on your statement of profit or loss. Okay, expenses for maintaining the asset's earning capacity are not capitalized, right? Repairs, repainting, training, wastage, and administration. There are some types of costs we will incur. For example, uh, in delivery, your vehicle has been broken, right? And in this case, repairing won't be capitalized because you are maintaining your asset. This is maintenance cost, right? And also, that's it. No, we have also depreciation. What depreciation means? Allocating the cost of your asset over its useful life. What is useful life? Useful life means the time you are going to use your asset, right? For example, if I have the plant and I'm planning to use it for 50 years, its useful life will be 50 years. For example, also I have a laptop and I'm gonna use it for 5 years, and after that it will be old and maybe not be able to work. Its useful life will be 5 years. Depreciation means you have spent your money for the asset, and first of all, it won't be the expenditure, and if you make this asset expenditure, it will be incorrect. Why? Because you will use this asset for the long term, and that's why you have to make this asset expenditure for the long term, right? And this method is called depreciation. Depreciating. We have two methods of depreciation: reducing balance and straight line. What does reducing balance means? The amount of depreciation will be reduced in the future, right? And carrying amount multiplied by percent of depreciation rate. Depreciation rate is given in your exams or in your cases. It doesn't. It is not the work of the accountant. Carrying amount. What is a carrying amount? Carrying amount means the balance of your asset in your statement of financial position, or after like deducting the depreciation expense from your asset balance. This is called carrying amount. Another way, straight line that's why the balance of the asset and also depreciation balance will be lower, which is reducing balance. And also there are some kinds of questions like what way by what way you can use like you can you can do depreciation. I mean, there are two assets, and first of all will decrease and also will decrease in the amount faster in the beginning years and lower in the other in the finishing or maybe in the final years. In this case, you will use a reducing balance method. By this way, your depreciation will be reduced in the future. What does it mean? In the beginning years, you will depreciate your asset for the higher amounts. In the final years, your depreciation amount will be lower. In this case, you will use your reducing balance method. Please remember it and also understand it. And all after this topic, we will go through the some cases and you will understand it in deeper. And also we have straight line depreciation. Straight line depreciation means depreciating your asset with the same amount, which means if you have the asset and it will be used, it can be used in the same way, and also its depreciation rate will be in the same way in the total useful life of the asset. You will depreciate this asset by straight line depreciation. For example, I have the plant, right? And when it becomes older, its useful its effectiveness will become lower. In this case, I will use reducing balance because in the beginning years I can use my plant more effectively. That's why I will depreciate it more faster and for higher amount. And also I have the office. um, it doesn't matter my office is older or my office is newer. It doesn't affect the effectiveness and productivity of my workers. That's why I will use straight line depreciation method. How? What is the formula for it? Cost of the asset is divided by useful life. Cost of the asset multiplied by depreciation rate. How do we record our depreciation rate? Depreciation expense. Debit depreciation charge. It's an expense, and you are reducing your asset balance by crediting it. Carrying amount equals asset cost minus depreciation. Or if we make it, oh, what's the problem here? Accumulated depreciation. That's it. What is accumulated depreciation? The total depreciation charge. Yes, you will record your total depreciation, and this is called accumulated depreciation. And how do we record the debit depreciation, credit accumulated depreciation? And also why we are crediting our accumulated depreciation balance? Accumulated depreciation is also called contra asset balance. That's why it will be increased. It will increase in the credit balance. Now let's go through some practices. And I have a lot of materials for the financial accounting. And now we have also one term, non-current asset register. What does it mean? In the non-current asset, the register includes cost of purchase, date of purchase, description of asset, serial reference number, location of the asset, where it is located, right? Depreciation method, what type of depreciation method are you using? Expected useful life and also carrying amount, not book value, right? Okay. acquisition, we have talked about that. Why should you know about non-current asset register? Because will it be asked in the exam? Yes, I have seen this kind of theoretical question in my financial accounting exam. And how will they ask, right? And for example, I have the asset, or you have the asset, or someone has the asset. And for the non-current asset register, what kinds of the balances or what kinds of the information should he or she write for his non-current asset register document, right? And there are maybe options like administrative and also legal costs and these kinds of things, and among them you will choose this one. Cost of purchase, date of purchase, when you purchase it, description of the asset, what the kind of asset is, plant or property, serial reference number. Every non-current asset has its own register number. Location of the asset, where it is located, in the Tashkent, in the UK, and other. Depreciation method, straight line or reducing balance. Expected useful life, for how long you are expecting to use it. Carrying amount, net book value. That's it. And now we have the question. This is about capitalizing. Hmm, I think we can also do that. Office premises, you are purchasing it. Legal fees, it is one-time cost. That's why we will capitalize it, right? Now, let's to make it more beautiful. We will capitalize it. We will capitalize cost of materials and labor to paint office. Don't capitalize it because it is usual expenditure, right? Maintenance, Mercedes E-Series estate cars. Capitalize asset purchase, number plates for cars. Yes, I think it is capitalized. Delivery charge for cars. It is one-time cost. Capitalize it. Annual road. Annual. This is annual, and we don't capitalize. Drivers' wages for the first year. Wage. It is administrative cost. Administrative costs expenses are not capitalized. Are never capitalized. Remember it. Blank taxi receipts printed with Billy's business name and number. Blank taxi receipts printed with Billy's name. I think blank taxi receipts printed with Billy's business. I think it is not also capitalized because receipt and business name, it is also I think I have thought that it is also advertising cost and administrative cost, right? And now we have yes, here we have one question, test your understanding too, and we will go through. First of all, uh, there is Kaya, right? Kaya has been running a successful nursery school, Little Lamb, since 2001. Kaya bought the following asset as a nursery expand. A new oven, a new oven for the nursery at cost of $2,000 purchased. So 1st December 2004, a minibus to take the children on trips. Purchased on 1st June. Oven at 10% straight line and minibus at 25% reducing balance. A full year's depreciation is charged in the year of purchase and none in the year of disposal. See here, this is the really important part. You have to know that. Full year depreciation is charged in the year of purchase because there may be some kinds of the depreciation rate. What I mean, you have purchased your asset 6 year before your financial reporting, and you may depreciate it fully in that year, or you may also use uh, this is per annum or annum balance or monthly depreciation. That's it, monthly depreciation, which means you will depreciate, you will deduct or divide your depreciation balance by months, according to months, right? That's it. Now we are depreciating it fully in the year of purchase, and we are asked to find the total depreciation charge for the year ended 31st October 2006. Right now, Let's find depreciation charge for own. Own. It is depreciated. It is depreciated on the straight line balance fully. Yes, okay, no problem. Um, 2000 equals 4 and 2000 equals 5, 2000 equals 5, 2000 equals 6. The same depreciation. Why? Because we are using straight line. Straight line means it is the same, right? It is linear, same depreciation, same depreciation charge. Okay. Uh, Cost is multiplied by depreciation rate. 10% equals to $200. And depreciation charge for what? Depreciation charge for minibus. Minibus and 2000 equals 4. We are finding 2000 equals when he purchased. Yes. Here you also pay attention there. That what is the difference here? Our year end is October, and he is purchasing it in the 2000 X for June. That means we'll depreciate it for 2000 X 3 and 2000 X 4. We multiply it, $18,000 multiplied by 25%, leading to balance 450. And this means carrying amount equals to 13 and $13,500. That's it. And 2000 x 4 and 2000 x 5, year depreciation charge will be 313,050 multiplied by 25%. And I don't know it, that's why I will use calculator. Here it is 2700. Really? Yeah, no. Here I have used another number. Yes. Choose $3,375, right? And this equals to carrying amount is 10,125. And last year's depreciation, because 6. This amount equals to what? 2,000 and 500 and $31.25, leading to a carrying amount balance equals 700 and 700 and 7,500 and $93.75. That's it. And what we will do, total depreciation charge for 2005 and 2006 equals to uh, Owen's depreciation plus Minimal's depreciation, leading to 2,731.25. Do we have this kind of option? Yes, we have. This is the option. That's it. And also, I will teach you one method, really easy. For example, you have given 10,000 or maybe 20, 125,000 dollars, and its depreciation rate. You are calculating depreciation for 3 years, and its rate is 25%. And what will you do? Fine. You will multiply this amount 5 times, right? In this case, you will find the carrying amount in the last year, in this at the end of third year, or for finding depreciation, you will multiply it by 1 minute. Sorry. Ah, what's the problem? By That's it. Third year's depreciation. What I am doing? I am deducting. I'm deducting the depreciation rate, right? 10,000, 10,000, for example, and I'm deducting depreciation rate, and it gives me carrying amount on that year, and that's it. What I mean is, this is easier method. You can use it in the exam. Okay, take care and wait for our next lesson.